Welcome. In this video, we'll explore how strategic planning helps organizations create value and make smarter decisions. To create value for money, funds must be applied economically, efficiently, and effectively. This means making smart, well-planned decisions, and that's where strategy formulation comes in. How to gain competitive advantage. Question of survival. I. Porter's generic strategies, 5 forces, which direction to go? I. Growth direction. A. Organic growth. Ansoff's Product-Market Matrix. B. Joint development. E. Defensive, non-growth strategies. A. Capital restructure scheme. B. Downsizing circa divestment. According to Michael Porter, competitive position is the market share, costs, prices, quality and accumulated experiences of an organization, product relative to competition. Competitive strategy is taking offensive or defensive action to create a defendable position in an industry, and to cope with competitive forces yielding superior ROI. Competitive advantage is anything which gives one organization an edge over competitors. There are following competitive strategies for companies to achieve competitive advantage. Broad target cost leadership differentiation. Niche focus cost focus differentiation focus, for luxury goods. What is differentiation? Differentiation is creating value through uniqueness. It could be at following levels of product: actual product, features, quality level, design, brand name, packaging, augmented product, delivery and credit, warranty, installation, after-sale service. Cost leadership is having lowest cost of producing. It could be achieved by mass production, economies of scale, latest technologies, favorable access to raw materials. Automation, minimizing overhead by exploiting bargaining power. Constantly improving efficiency and economy. For example, through value chain analysis. What is focus? Focus involves a restriction of activities to only part of the market, a segment, through providing goods, services at lower cost, cost focus, providing a differentiated product, service, differentiation focus. Let's compare the advantages of cost leadership and differentiation strategies across 5 competitive forces. Rivalry, cost leadership, profitable even in price competition. Differentiation, reduces direct competition. New entrants, cost leadership, low price is an entry barrier. Differentiation, customer loyalty is an entry barrier. Substitutes, cost leadership, firm is less vulnerable than competitors. Differentiation, brand loyalty is a strong weapon. Customers, cost leadership, customers won't switch. Differentiation, customers show low price sensitivity. Suppliers, cost leadership, high bargaining power due to market share. Differentiation, supplier may raise prices, but higher margins offset the impact. According to Ansoff's Product-Market Matrix. Now let's explore Ansoff's Product-Market Matrix, a strategic tool for business growth. This matrix has 4 growth strategies, based on whether a company is targeting existing or new markets, and offering existing or new products. Market penetration. This is a low-risk strategy with no capital investment. It aims to increase product usage by existing customers or grow market share through competitive pricing, advertising, or sales promotions. Market development. Still low risk, but it may require some investment. The goal is to find new geographical areas, target new customer segments, or offer new packing sizes. Product development. This strategy is riskier and needs investment. But a company can use its existing marketing channels and its understanding of customers to introduce new products in the same market. This also increases the cost of entry for competitors. Diversification. The riskiest strategy, introducing new products in new markets. It needs significant investment and new competencies. In summary, the higher the move across this matrix, the greater the risk and reward. If you found this helpful, don't forget to like, share, and subscribe for more valuable business insights.